New Year eagles. Who's ready to soar this year like an eagle? Give me a Y. So, on FX Street, it was LAR Lions. In FACE, it's FACE Eagles. FACE now stands for Forex Analytics Community Eagles. So it's for people whose goal it is to soar above the crowd. Still a little under it, Forex Gal, thanks for asking. But the show must go on. The markets are open, it's a new year, and looking forward to collaborating with everyone, working with the team, and making this your best year in the markets ever. So write it down. This is going to be my best year in the markets ever. Thank you so much, Nick. So I thought I'd start off with a few looks and maybe an I told you so, which placates. So we have our Heisman Trophy winner back with us today. We're at full strength, ready for the new year, but Steve showed this, head and shoulders, and there's a weekly chart that comes in, the dollar around 88.5, and Greg has said, we'll at least take out this low, and to me that looks like it's underway. Any rallies in my view from here are a gift for a shorting opportunity to take the dollar down under this low. I don't believe we'll have any substantial rally until this low has been violated, taken out, cleaned out, and we get the last dollar bull out of the way. I'm thinking anywhere from 90 to 88.60 in the coming weeks. You have a 3 drive. It's interesting you say that, George. That's my other look. Give me a Y if you guys are with me on the dollar. I don't think there's any substantial rally coming in the dollar until we take out these lows. And the question will be by how much and what's the form and structure of RSI when we get down there. Okay. So here's my look. George is talking about a 3 driver in Aussie. I'm looking at Aussie yen here, and I believe that it topped last night. I'm not saying it's going to be a big crash, but I think that, you know, we could trade down into the 86 handle. So how I would handle this is my personal view. I don't believe, I haven't even had the time to check out what the team is thinking, but I'd be looking for some type of failing rally here, maybe back to 88.10, 88.15. Give your stop some tolerance over this high, maybe 30 pips. And I think that we could get a decent retrace. Already getting a pretty negative day on it. I don't have the fibs here, but we could definitely correct this recent advance, which has been, you know, as directional and strong as gold. So Aussie yen looks to be setting up a pretty negative day. Maybe that implies that even though indexes are up today, that they're going to at least correct before there's another new high. I was just looking at Peter Goodburn's interview that I did with him in May, I believe, and then looked at his actual target. I'm sure it may have changed. You know, we're talking 9 months ago, but he was talking 27, I believe 46 or 27.60 before we get a 4th wave pullback. So that would mean that most likely we're going to get a pullback in Aussie yen and then a high, another new high to take out this high above 90. So you could see how that could happen. Say we went almost 400 pips here. So say we pull back 2, right, or 2.5, and then we rally 6. Okay, 1.618, maybe 650, and that's going to take us well above 90. So that's my first look for you here for the year. I could take a look at the Aussie and see if you're seeing it correctly. I'm very happy when people bring up 3 drives. I think over the course of talking about this type of formation And your time frame is what, George? 1 hour? Okay. Someone asked me which time frame does it work best on, and I said it's not the time frame, it's who's looking at the time frame. Yeah, I think this qualifies. If you're counting this as 1 confirmed high, 2 diverged, pretty high reading, oh, not really, 70, and then this high here. Aussie yen for some reason looks a little weaker to me, but this could qualify. Something to keep in mind, George, I don't think I taught it in that video that I put out on 3 drives, but sometimes within the third, you could have a fractal of a 3 drive. So this might be 1 of 3. Maybe we get 2 of 3, pull back and 3 of 3. But to me, it looks like we're in the zone. But Aussie yen to me looks a little bit more vulnerable. Does that help? Happy New Year, Kareem. Thank you, Ziggy, from your lips. Eric, same to you. Does that help, George? And you know what? Everyone should take every possible step to make it their best year ever as well. And I think an important ingredient of doing that is joining. So join. So all right, let's take a look at Aussie yen. I'm interested in what Greg is saying and what Blake is saying, what Greg is saying. Here we go. Okay, so this is the weekly macro. Okay, so here we are. We got to, didn't we get to the 88 on Aussie yen? That was Stelios's look. Yeah, we got there. So Stelios, I think, had this drawn prior. We got above 88. We went to 88.40. So Stelios is looking for, you know, at least an ABC here. Takes it down to 84, like it. Let's see what the rest of the team is saying here. See what Greg is saying. He's looking for 90. So there's no agreement there. This looks a bit old. I believe that's is that the weekly? Okay, so he thinks we have 90 in it before we get this a bigger decline. So
hey, Dale.
Right. Yeah, hi.
Good morning. Happy New Year.
Happy New Year, brother. How are you?
Happy New Year to you as well. I'm good. I'm very good. Got some rest, which is always, you know, very welcome. We spoke about the Aussie yen with Greg on Thursday on our last show, if you remember. So he's still of the same opinion. So, you know, he hasn't updated that chart because nothing has changed. But as you see there, he was also looking for a pullback from about current levels. And
okay.
Yeah,
I don't remember
an ABC. So I think that's what we're getting, and we're seeing very nice reversals today.
So we could pull back to 86 on an ABC and then make a new high to 90.
Yeah, that's quite likely actually, because we're seeing both for the Aussie yen and the Kiwi yen some very nice reversals from some very interesting levels.
Yeah.
Today I can go ahead and show the Aussie yen.
Yeah, go ahead. Boy, you know what, guys? It's always nice to have time off, but I don't know about the rest of you guys on the team or our Eagles here, but I sure miss this. When
definitely.
A 4-day holiday, you know, just having an hour or so to talk to everyone about what's going on. I miss it on the weekends.
Absolutely. And you know something, you know, we are extremely honored that FACE has gained so much traction. I mean, even on our last show on Thursday, we almost had 200 people here, which, you know, the markets were completely dead and the vast majority of the people were already on vacation. And I really didn't expect that. I expected like, you know, like a record low attendance because everybody had already left. But, you know, we are extremely honored and happy that, you know,
That's an investing.com day.
Yeah, but still, that applies. You know, that applies the same way. You know, everybody was off. I mean, Twitter, my Twitter feed was almost dead. You know what I mean? So I can judge from that as well.
I know I was dead.
Yeah, you were actually sick.
I woke up and I thought, yeah.
I remember you woke up in the middle of the night. Anyhow, you're good now, right? That's what matters.
Yeah, I'm here.
Good. Good. So let's have a look at a few things. Blake is going to be with us, by the way, in a few minutes. I know you've all missed him. He was.
Yeah, it's like not having our QB here. What's the name of the guy from Oklahoma again?
Mate, I'm Greek. We don't watch American football. I mean, we don't even like American football, to be honest.
Hey,
we watch.
Speak for yourself, man. I like American football.
Wait a second. When was the last time you were watching American football games?
I watched the Super Bowl final between the 49ers and the Cincinnati Bengals. What was that, 1989 or something?
Okay. So recent.
Yeah. He rested his case. Anyway, it was a great semifinal game. But Blake is like, you know, he's like the QB. And
absolutely.
They set the tone for the team. And it's their enthusiasm that sparks the team. So I'm not saying that, you know, if Blake is injured or on the bench or on vacation, we can't do it. But it definitely, you know he's missing when he's not here. Anyway,
there's no question
to be back at full strength is the bottom line.
Absolutely.
Baker
And
Mayfield.
Actually,
All right, Baker Mayfield.
With some extra strength.
Baker Mayfield. That's who Blake is. And both
if you say so.
Start with B. Baker Mayfield.
I mean, as I said, I don't know American football stars, so I'll take your word for it.
All right.
So I'm going to let Blake speak about the Kiwi yen. Although, if you remember on Thursday, I said that I like the Kiwi yen even more than I like the Aussie yen because it has more clear technical picture. The reason I'm going to let Blake speak about it is because he actually put on a pattern in play for it. Our friends that are subscribed on ForexAnalytix already know about it. They received the notification as well. So I'm going to let him speak about that. But even if we have a closer look at the Aussie yen, you'll see that so far today we're seeing a key reversal day. Of course, it's very early in the day, so we have to, you know, to wait to see how the day closes. But so far it's starting very promising if you're looking for the downside, because this was also the 61.8. Besides being the 61.8 was a level of support resistance in the past, and we also have this ascending channel which we're currently testing. There is a good chance we're going to break to the downside today, which should at least open the door, you know, for a decent correction lower towards the 86, 80, 90 area, which is like 100 pips lower, and that's just the first target. Okay, so the Aussie yen is starting, you know, very promising, having to do with the downside. And as I said, Blake is going to talk about the Kiwi yen because we have other things to talk about. First of all, it's the euro, right? The euro actually followed the path of least resistance. We had said many times that we were looking for a break to the upside sooner rather than later. We got that. Many
times.
Yeah, to be honest, many times, yes.
I don't think anyone that listened to us for the last 3 weeks
hasn't
would have been bullish a dollar. Would have been bullish a dollar.
Indeed. So we did get the what looked like you know, a very likely scenario from a technical perspective. We got the break above the flag because this is clearly the pole and this is clearly the flag. Okay. and we're currently almost testing the previous high at 121. It's actually a little bit below 121. I honestly don't believe that this level is going to hold. It might hold on a first on the first test, you know, so we can get somewhat of a retracement lower, but I don't think that it's going to hold for much longer. So I do think that we're going to see new highs from there, and it's easy for us to project new targets simply if we take the correction, the bull flag correction, and we throw in some fib extensions from here. We can see that 122.40 is the 127.2, 123.16 is the 141.4, and 124.26 is the 161.8. So these are potential targets. Just below that, we have the 50% fib of the whole move lower at 121.67. So, you know, we have several levels to be looking for. Personally, I would really, I really believe that we might see, you know, the 161.8 being tested. So, you know, levels close to 125. Why not? Okay, so obviously nothing happens. Almost nothing happens besides cryptocurrency moves in a straight line. Okay, and obviously people buying before a pullback, you know, might find themselves out of the money for a period. So I'm not advocating that somebody should be buying here. You could have bought the breakout, or you could have bought the consolidation here, which was more or less you know, clearly constructive, as we had talked about. Okay, now let's have a look at a few more pairs. It's the USD yen I want us to have a look at. Once again, you know, we got rejected before even retesting this descending blue trend line. As we had said plenty of times, as long as we stay below this line, another move lower towards the 111.60 area, which has acted as support resistance plenty of times. Also, the 200 DMA is there, is more than likely. Below that, we have the 111 level, which is the area that gave us a low at the end of November. Even if we drop below that, close to 110, we find the 61.8. Bottom line, obviously being long, the USD yen, you know, was not a good trade. We had said that even when we were higher. I think more or less the same applies here. On the other hand, being outright, like, you know, short and looking for much lower levels is also something that the market has given us no reason to do so, because this pair has been more or less choppy for a period of time. So nobody says that it can't remain being as such. Unquestionably, though, we are seeing the year starting on the back foot. So seeing somewhat lower levels from here is a decent possibility scenario. Somebody can even advocate that this is a head and shoulders formation. It's not the prettiest one we have seen, but I'm going to show it regardless. This one, right? As I said, not the prettiest one we've seen, but, you know, in which case also I would advocate against being long. Okay. Personally, I'm not looking to be involved on the long on the short side. I think there are better trading opportunities out there. I'm just stressing out that the path of least resistance for now remains lower. Now,
could that be, instead of a head and shoulders, just a simple ABC that takes it to Grega's target around 110?
Absolutely. Absolutely, okay. It can be an ABC towards the 110 area, the 61.8. Even if we project, you'll see that it's somewhere there. That's why I'm saying that really, just by zooming out and looking at all this period of price action, you don't have a really strong signal to be. I'm not talking now in the short term. I'm talking to the medium to long term. You know, there is not a strong signal to be either bullish or bearish here. So I know that as long as we were close to this critical resistance area, obviously, if I had to do something, I would definitely be short. But that doesn't mean that if we move lower, I would be really looking for a continuation, because, you know, the pair hasn't really done much since the beginning of the year. So it's already a year that we've been in choppy conditions. More or less the same applies, that they're definitely highly correlated or whatever, but I'm saying that, you know, equivalently, if you see, you know, there is not much of an indication to be really short or long gold or silver. By the way, gold is resuming today this wild move that started from the 1236 low. It's really wild. I mean, it's almost without a breather that it's been moving higher. We are now approaching the 127.2% extension of this move lower, and I would really, given the strength of the move higher, I would expect sooner rather than later. Also, something that doesn't show here, I have it on my 4-hour chart. Let me show it actually here. This is also an interesting area of support, of resistance, sorry, because it's also the 61.8. If you see from this high, okay, so anywhere between 130, 1311, 1316, I would expect that the possibility of a pullback to at least retest the 1300 area before moving higher, if it is to move higher, because it's really.
Yeah, you cut in and out.
Yeah, you are lagging a little bit.
Oh, okay. My internet seems to be fine, and I have a green signal here. Is it okay now?
Yes.
Yeah, it's fine.
Okay. Okay. So as I've said plenty of times, gold and silver have been, you know, giving like very violent moves to either direction, and they're trapping people into believing that, you know, due to the nature of the moves, this is a new impulsive move towards higher or lower, in this case higher, and then they completely reverse and they produce violent moves towards the other direction.
So you're skeptical. You're skeptical going to 1360. You're skeptical of that.
I'm quite skeptical. Yes.
Okay.
I'm not so much buying into this move. Actually, as I said earlier today to the chat room, I've sold gold like $1 below here for a counter trend retracement move. Yes. It's more of a gut feeling kind of thing. Also because we are in this cluster of resistances, as I've said. But I really believe that we might see a violent reversal from around here. Anyhow, I'm risking just a few dollars, and you know, this is not a trade I had planned for a long time or whatever. It's more of an intuition. My gut tells me that if something reverses having to do with the dollar, that's going to be gold and silver from up here. We're going to see. Yes, Elio?
Hey, just one note. You know, people will know I'm actually long silver, but I'm not. It's not what I'm saying now is not biased in that respect. We have to remember that big drop in gold when it broke above 1320, 1330. Remember, it was met straight away by huge selling. That period of time, the dollar was not actually strengthening. It was strengthening a little bit. So the move down from up there was, you know, at the time I couldn't make much sense of it. I think the move up now, again, you can't really make much sense of it. But the thing is, it's reversing the first move or part of the first move. So I think it might be that. It's not that, you know, we were flatlining and suddenly gold is making a move that we cannot explain. It's kind of offsetting that downward move from before. But
but on the other hand, you know, we have yields which don't play ball with what we see in gold. You know what I mean?
Yes, I agree.
We did get to see some rebound in yields. I mean, some retracement yields. I was talking now about bonds. We did get to see some rebound in the bonds, but not such in any way that would explain such a strong bounce in gold. Also, by the way, since you mentioned silver,
I agree. I agree.
Unless that correlation is breaking down, Steve, because, you know,
we'll see.
I have seen time periods with a bull market happening in gold and a bear market happening in bonds. And a lot of it is, although there is opportunity cost, when gold could rally 2-3% in a day, and you're talking about yields at, you know, where are we at, 2.8?
In what? In the 10-year, you mean?
In the 10-year?
No, we're below that.
No, yields in the 10-year.
Let me show you. Yields in the 10-year.
Oh,
There we are.
240, okay.
240,
So,
244.
So your
By the
opportunity
way,
cost is 2.4% a year. And if gold gets going, that 2.4%, it may have to go to 4% to stop a gold move. Just things I've seen before.
Dale, you're absolutely right. I remember the 2004 to 2006 rate hiking cycle in the US. I was actually trading the dollar at the time in London. Yields went up, and the gold and silver also went up. So you're absolutely right about that.
Yeah, you know, they work till they stop, as Blake would say, or as Steve Volge would say. Anyway, I'm just being Phil Donahue, the devil's advocate, talking about the other side because I've seen so many cycles.
Absolutely.
I
By the way,
want to share my prehistoric knowledge with our community.
Since Stelios mentioned silver, watch out for 1720, 1725 for resistance in silver. Also, speaking of the euro and saying that before, let's have a view on the 4-hour chart. This is another reason why I would caution not getting long exactly here in the euro USD. As you see, we have potentially an ascending channel here. We hit resistance. So, I wouldn't be looking to buy it up here. I would probably be looking to buy it if you get lucky on a retracement, even if possible down to the breakout area. Okay. Same thing with the cable here. Potentially, we might see some. In general, we might see some short-term rebound. This is the DXY. Let's have a look at it as well on a 4-hour chart. We might get. This is the 78.6. We might get. A rebound in the dollar and the dollar pairs reacting somewhat before resuming the move that we're putting on. But as you mentioned in the beginning, the dollar has broken below its head and shoulders formation, and that's definitely a very, very bearish development. And there is a very good likelihood that we're going to see new lows towards the 88.50 area. That's a longer-term target that we were showing also on Thursday. So that's a possibility that we have to keep in mind.
Steve, sorry
yes,
to interrupt. Just one more thing. I was looking at the US dollar index, not the DXY, US dollar on the weekly. I posted it on the chat. I don't know if you saw that. We are approaching triple confluence support, and I think we might see a little bounce in the dollar. I agree. I think medium-term dollar is going lower in 2018, but we're very close. I mean, if you look at the US dollar weekly chart, you will see there's if you zoom out a little bit.
Show yours, Stel, so we can see what you're
Actually, yeah, let me do that very, very quickly.
Go ahead.
Hold on. Let me take sharing, change presenter. Where am I? There I am.
Because I think any bounce is a gift. So I hope you're right. Okay.
Can you see? Okay.
Yeah.
So we've got this support trend line. We've got the moving average, 200 weekly, and also the 38.2 from that move higher. So we've been saying, I think all of us, that there might be a bounce in the dollar in the new year. I will be looking for such a bounce to sell into the dollar, but I think based on this index, which is not as heavily made up of the euro.
Eurocentric, yeah.
Yeah, this is the FXCM dollar, right?
Yes.
Yeah, the Dow Jones FXCM, yeah.
Okay.
Exactly. So just one thing to have in mind.
Yeah, it doesn't look as weak. Doesn't look as weak.
Yeah. That's it. Sorry about the interruption again.
That's why we're here.
A dose of reality, man.
Yeah, well, hey guys.
Hey, Blake.
Happy New Year.
Blake.
Happy New Year.
Happy New Year to you, mate.
Happy New Year.
So,
Happy New Year, QB.
Thanks. Yeah, you must be referencing that playoff game last night, the Orange Bowl, right?
Baker Mayfield.
Oh man, what a game! What a game!
Oh man. Yeah, but you're like that for our team. You see how he is on the sidelines and everything. You're like that. We missed having our quarterback for a while.
It was a nice break. I really thoroughly enjoyed actually sleeping in and not being in any positions, and it's been very difficult this morning, being awake and trying to get back into reality. But it's nice. We're seeing some good moves in the currency market. Stelios was just talking about the dollar. Well, you guys were just talking about the dollar, and I look at this bounce in precious metals, in gold and silver. Holy cow! I mean, it has been straight.
It's amazing, isn't it?
Yeah, it's been straight up. It's been like one-way traffic, and that's the problem when you get at the end of the year. You just get these one-way moves, and no one wants to get in front of them. And the dollar has been specifically just getting wrecked almost across the board. And we've seen here's the euro dollar trading up towards the 121 level. I've been saying to the trading community that I've been talking to that I think that the euro dollar, well, and then also I mentioned this on the week ahead video, that I think the euro dollar could reach 122 or 121.50, which is just into new highs, but at the 50% retracement. I wouldn't be surprised if the dollar hits new lows and the euro hits a new trend high here, even if it's just brief. The biggest problem I have right now with the dollar and where it's at is that the market is extremely long the euro. So I especially speculative interest is very long the euro, and that does concern me a little bit. That's why I'm
like we talked about it, and even though we were looking for new highs in euro, and then kept bringing up the extreme positioning, and I said, wow, if it's extreme positioning now, how extreme is the positioning going to be at new highs over 121? Probably more extreme. Right?
Yeah, I would think. I think that I think the euro has a long way to go and higher. But as I also explained in the week ahead video, I think last year's move was the easy move. That was the easy dollar sell. Donald Trump was inaugurated. The dollar sold off immediately that day, and it's been almost straight down since then, and very, very minor pullbacks. I think that the dollar is going to continue lower. There's a lot of expectations for the Fed to continue to raise rates. A lot of it's priced in. Whether the Fed follows through or not is probably going to be, that's up for discussion and debate. But the fact of the matter is I think that expectations are going to go up and down going into 2018. People are going to go, oh, the data is better, so here goes the Fed. They're going to continue to raise rates, and then the data is going to worsen, or maybe financial conditions might worsen, and they're going to change. Then people are going to change their views. It's just what I'm trying to say is I think 2018 is going to be a lot more choppy as far as the dollar weakness goes, which is great because for us as traders to have a general direction that we're trading, like in, for example, a weak dollar situation, which I think is going to be probably most of 2018. But when you have a choppy move or not a straight move, it's a little bit more lenient for us to mistime our entries and still be right. And which I personally, I prefer, and I'm glad about, because I'm not the best market timer out there. Admittedly, I might get into a trade and have to sit in it for a few days for it to really work out in my direction. And so as a result, when you have volatility, it gives you that opportunity to get in and out a little bit easier as a trader. So that's why I prefer to have some volatility. I think the overarching theme over the course of 2018 will be weaker dollar, but I don't think it's going to be in a straight line. And like I said, that type of volatility is good for us. It gives us opportunities to get back in, and it gives us opportunities to get back in, and it's a little bit more lenient as far as timing goes. Now, Steve, a little bit earlier, you were talking about you were talking about the precious metals. Now, gold has been an amazing rally from the lows. I mean, it has just been really nonstop. So where do you think the gold market's going to stop from here? Because I think it's very hard to judge at this point.
I think that we might see a retracement from somewhere here. The 127.2 is at 1316, for example, for at least a little pullback towards the 1300 level. So even if this is a beginning of a bigger bull move, I would definitely expect a $15-20 retracement before resuming higher.
Okay, and I don't disagree. The thing is I have to go back, and you can see your dotted line, and your dotted line is the same line that I'm looking at, the blue dashed line. If you go back on a weekly chart,
that's a big breakout. There's no question about it here.
Yeah, I mean, that was a big multi-year breakout, and we basically respected that big blue dashed line, and we have rallied aggressively. I think it caught a lot of people off guard, because I think a lot of people got long the dollar, short precious metals, and really it's been 3 weeks of an unadulterated move higher. And now obviously we're getting a little overbought at this point, and that's why I'm also a little skeptical about the euro dollar going much higher from here. I mean, yeah, can we go to 121 or 21.50? Sure, I think that's possible, but I am a little skeptical about chasing the euro. Like, buying the euro right now doesn't make any sense to me. And I'm trading the dollar a little differently. As I put out a pattern in play on the New Zealand yen. I shorted the New Zealand yen.
I love it, by the way.
Yeah,
I love it. I was showing it on Thursday. I love it because it's a confluence of resistances. That's what I have on my chart here.
And
I love it.
Exactly what it is on my charts. It's the underside of the trend line. It's a 618. A lot of resistance up here. It's been a very aggressive bounce
already today.
Yeah. So today, that was critical overnight. And I actually sold it. I didn't put out the pattern in play last night because when it's my first trade of the year, really. I didn't want to. I'm still, my confidence level isn't that big because I haven't been in the markets for the last week and a half. I've really been like just in cash. So,
yeah, but you have been during the past 25 years.
Yeah, true. But still, the thing that really did it for me is the false breakout overnight. The false breakout above the highs. Because that it was a false breakout above the highs. It was a false breakout above the 618. And if you look at the Aussie yen, the Aussie yen's the same. And I can take over the charts from here, Steve. So this way you
go ahead. By the way, as I said on Thursday as well, I prefer the Kiwi yen because it had the extra benefit of the underside of the broken trend line, which the Aussie doesn't.
Right, the Aussie yen doesn't. But I still put on a short on the Aussie yen as well. Not as aggressive as the Kiwi yen, but the Kiwi yen it matched up. I mean, this is exactly what we want to see. You have the underside of this trend line. You can see it right here. Okay, broken trend line. We're basically retesting like we've done it here, and then obviously overnight we hit a new high. Okay, and now what I'm looking for to be more aggressive at this point is a break back below this. See this, all this support right through here. This is a lot of support. I mean, you can actually come all the way back here. Once you start getting past these levels, then it really opens up. And for me, and then there's the 200-day moving average. For me, we also want to see some in my opinion, you're going to want to see some reduction in risk appetite, which the stock market has been unbelievably strong, but I have to point this out, and I wasn't really paying a lot of attention last week. I just, obviously when I was looking at, the analysis going into this weekend, the reason why I'm also kind of queued up in the yen pairs right now is because last week, this is a weekly chart of the S&P. Now, granted, there wasn't a lot of volatility here, but that's a shooting star. That's an outside weekly candle, and we closed on our lows. Now, I know we're up this morning. I know the market is higher at this moment. I just don't think, I think you have to sell this rally, actually. Now, I'm not shorting the S&P per se, but I am shorting yen pairs, because if you look at the yen, and especially the dollar yen, is really displaying weakness right up against this huge triangle. So once again, I think that the dollar yen is going to be rolling over here, and if the dollar yen pulls back towards the 108 level, obviously the New Zealand yen, the Aussie yen, any other yen, another great yen pair that I actually have written down in my notes that I did not short was, I wanted to short the Canadian yen. I mean, look at this thing. Look at the candle on Friday. Look at that reversal candle on Friday. That was a massive rejection of the 618, big, shooting star reversal. False breakout above the highs. I loved it to the short side. I just didn't short it last night. It was one of those that I was like, I'm just going to focus on the New Zealand yen, and the Canadian yen was trading about 40 pips higher last night, and I was like, I should short this one too. But
that's a great lesson. Like short the relative weakness, the weak sister. That if it should be performing better under current conditions, and if it's not, what's going to happen if conditions turn negative? Excellent lesson.
Yeah, and thank you.
You learned that in the old investor business daily days, Blake. That was a big deal. Relative strength rankings.
Yeah, but see, I do. One of the things that I've always focused on as a trader is, if I'm, it's the whole reason why I did a bias chart for currencies, but I've been doing like a T chart, what we call a T chart for I used to do it for asset classes all the time. I would say, okay, like for example, look at all the semiconductor stocks. Okay, you've got Intel and Maxim and Applied Materials and whatever other semiconductor stocks. What I would look for is, I would say, okay, well, all the semiconductor stocks are rallying right now, but which ones are underperforming? And so if I looked around, I said, okay, well, Intel's underperforming. Soon as the stock market gave me any type of whiff of weakness, I would short Intel, because I would short the underperformer or the relative weakness. And that's the same thing that you look at the yen pairs. It's like, okay, well, I knew that the New Zealand yen is underperforming, the Aussie yen, for example. The Aussie yen had a much steeper move, and the New Zealand yen, well, I guess they both, relatively did the same. But then I'll focus, okay, I'm just going to focus on this one right here. And like I said, I could have picked the Canadian yen and done the exact same thing. I just chose to go with the New Zealand yen and the Aussie yen. Obviously, I picked Aussie yen too. But I'm a little bit more aggressive in the New Zealand yen. But that's what I look for. I look for a divergence in correlations, and so when correlations start to break down, I'm using that as a cue to take positions in the market. So that's something that I practice quite a bit in the markets. And again, I'm just going to point out here that you have there's a couple other things I want to talk about actually regarding these yen pairs. I'm not, although that I think the euro, like for the euro is a perfect example. I still think the euro is going here. All right, if you look at the weekly chart, I think the euro is going to at least this 50% retracement. I'm talking, here in the next week, okay, next couple of days, let's say. I think the euro dollar is going to go right to 120.50, 121.50, and it might even go higher. Could very easily go higher than that. But I'm a little skeptical about playing the euro to the long side because of the positioning of the euro right now. What I'd rather do is, if you think, and I do, and if you think that stocks are going to come off a little bit, I'm actually more looking at shorting the euro yen. And what I have written on my notes is that sometime this week, if we drop back below 134.50, that's a failure here. Now, if you take this range, you can see the range right here. The range is, we're hitting the 127% extension right now. If we, for some reason, drop back below 134.50 and really close like below 134, I'm going to be looking at that as a big failure for the euro yen. And then I'm looking for the euro yen as a reversal trade personally that I want to take to the short side. So that's what I'm looking for. Hey, Steve, are you still there? Hey, can I pass you the screen for a second? I had one of my monitors go out, and I have to go behind my monitor and adjust the power cord. I think the power cord just released a little bit.
Absolutely, it's also a good opportunity to give. Let me take the screen.
Sounds good. I'll be back in just a minute.
Yes, mate. It's also a good opportunity for me to show, a couple of other stuff. The two remaining positions that I had, USD NOK, is doing great. Actually, it's accelerating lower. Be careful here, though. You might want to take some profits here at 8.10. It's the 38.2. We also had some support there. On the other hand, any rebound towards the confluence that we have here at backtesting the 50% fib, also the 50 DMA and the 200 DMA are there. It's going to be a great opportunity probably to resell. I think it's looking very good for another move, at least towards 8, even after a short-term rebound, as I said. And the other position that I still hold is the DAX, which is finally playing ball. It finally cleared the 12,900 area. So I'm looking for a retest of the 200 DMA, perhaps even a little bit lower for 12,500, which is 61.8. If you're back, Blake.
Yeah, I'm here. Yeah, okay. Yeah. I had a cord that I suspected was a little loose behind my monitors, and it was. I had to jam that sucker back in. Another.
By the way, Blake,
oh, go ahead.
I haven't addressed any of the questions. I'm just telling you so you can go ahead and address them whenever you feel like it.
Yeah, I might address a couple here in a moment. One of the
things. Nice DAX trade, Steve. Very nice.
Thank you. Although the NOK one was is even better performing and in a faster time frame.
Okay. Well, nice NOK trade. Two.
Thank you. Thank you.
So I missed what you guys were talking about regarding the DAX and the NOK, but I want to look at the US dollar Mexican peso. I'm a little torn here. I was the guys in my office, they were taking a week off, and and everybody decided, okay, well, let's not trade. We're just gonna not getting any positions. And I was in New York just before the Christmas holiday. And I was telling the guys in the office, I'm like, okay, I'm not gonna trade, but I really, really want to buy the US dollar Mexican peso. And we were trading right down here at this 1920 level. And I'm like, it's a big cup and handle pattern. It's going to break out. I know it's going to break out, but I'm just not going to do it because I know we're not going to trade. So it did. It busted out, very thin markets. It rallied pretty sharply. And then we came within the 161% extension, a couple of days. This is, just right around, the Christmas holiday, right after Christmas. And I'm like, man, I just really want to short the US dollar Mexican peso right now, but I didn't. And now that we're where we're at in the peso, I probably, if you want to play the dollar to the long side, this is one of those currency pairs. If the stock market sees a little bit of risk aversion, you might get a, here, and let me draw it for you. Yeah, I'm gonna grab a pen here. Let me just get the right pen color. So you might get a rally back up here, and then ultimately I want to be a seller of the US dollar Mexican peso at the major 618 retracement of this move. So if the US dollar Mexican peso makes it to 20.25, that's where I want to be a seller. I think, and I'm not playing it, I'm pointing this out for you guys, that there's, you know, this big, see that cup, see that handle, okay? So that should play out to 2025, I think. And like I said, if you guys want to play, like if I was going to play something on the, you know, the dollar on the long side, it'd be right here. You know, I'm not going to. I'm not comfortable buying the dollar. I'd rather sell the dollar, frankly. So I'm going to use this opportunity, if it does bounce here, to be a seller up here. But I wanted to point that out because that's what I'm thinking. It does, you know, and just because I think something and just because I plan something doesn't mean it's going to happen. It just, you know, I try to imagine what I think is going to happen in the markets and play into those ideas. And like I said, I'm not buying the dollar. I'm not comfortable doing it, but that is, you know, to me, this is some pretty big support down here. So if you're looking to play the dollar long, this might be the place to do it in the US dollar Mexican peso, just because of this big, you know, this big cup and handle pattern. But ultimately, like I want to, you know, look at this like longer term. I really think that the US dollar Mexican peso, this top is an actual formidable top that we won't see broken. I don't think, and that's why I'm going to wait for just one more rally, and then I'm going to look to trade it back to the short side and I'm giving you what I'm looking to do over the next couple of months. You know, I'm still looking actually to play the Mexican peso to the long side, but I don't know how it's all going to play out, especially if, and let's say that we do have some, you know, risk aversion in the stock market. I don't know how that's going to play out, because I'm going to have a hard time buying an emerging market currency in that type of environment. So that's why I've kind of got to see, you know, before I trade something like that, I've got to see where we're at. And it's not just a Mexican peso trade. It's more of a, you know, global risk appetite trade. I can't. They have to be the right conditions. You know, maybe I'm wrong, and maybe the stock market just, you know, goes up another, you know, 20% from here, and then that is the right trade. You know, that, you know, shorting the US dollar Mexican peso is probably going to be the right, you know, trade if the stock market continues blasting higher into the new year. So let me grab a couple of comments and questions really quick. I know there are a few that have come in. Forex Gal said, Mr. Blake, charts. Hopefully you can see my charts now. Eric writes in, so I know the call is weaker US dollar, but is it possible that others like the euro may be weaker than the US dollar? Yeah, it's absolutely possible. I mean, you know, I think one of the outliers in all this could be, you know, like the pound. I mean, I look at the pound dollar and we're in a bull flag pattern, right? But you know, the pound, and that's what the bull flag points to. It actually points to a move to 138. But the pound is a product of Brexit and Brexit negotiations. So is it possible that the dollar's weaker and then the pound is weaker as well? Sure. I mean, I don't think that's the case at this moment, but you know, could other pairs be weak or just as weak as the US dollar? And you know, absolutely. For example, okay, and let me give you another example. I'm trading the Aussie and New Zealand yen to the short side. That's what I'm currently doing personally. All right. If we go into a period of risk aversion, there's a good chance that not only the dollar will be weak, but also commodity currencies will be weak. So what does that do to the New Zealand yen and the Aussie yen, for example? I mean, these things will get absolutely pummeled if, you know, commodity currencies are weak and the US dollar are weak, which is, if you go back, if you look at correlations in times where the market is under duress, that is, that could very easily be the case. Or yen is strong and yen is strong and commodity currencies are weak, and then the Aussie yen, New Zealand yen end up getting absolutely destroyed. So yes, it doesn't have to be, one shoe fits all when you're talking about dollar strength or weakness. Forex Gal said, Mr. Dale, any interview this morning? Do you have an interview, Dale? I think he has the pivot.
Yes.
Pivot King, right? Is that it?
Pivot, Steve Anton.
Okay, so
He'll be here. Yes.
Great. Okay. Nick says, hey, Stelios, Blake, Happy New Year. Is this what is concerning you in the euro when you talk about positioning? And you gave me a link. Let me see here. Well, here, let me just let me do this. Give me a second. Let me pull it up over here. Let's see, currencies. Let's go to the euro, COTs, and let's get rid of the dealers. And you can see speculators, oh, whoops, that's Canadian. Sorry, here's the euro. Okay, let's get rid of the dealers. You can see speculators are extremely bullish the euro, and when you get extreme, tendencies, and this is not so extreme, but you can see you get extreme tendencies. The euro tends to go down here. You get, extreme tendencies, the euro starts to go down after that. Extreme tendencies, the euro starts to go down, following that. So, that's the thing that really worries me probably the most about the euro dollar at this point.
Usually in COTs, Blake, large speculators and institutions, because they're hedging, so they're always going in quotes against the trend, but they're always right at the turns. So when we usually see extreme readings, usually that's when momentarily when the trend switches, the large speculators and the institutions are on the right side of the trade.
Right. Exactly. Michael says, hey, Michael, how you doing? He says, Happy New Year, Blake. Look at gold and copper. Thanks. And yeah, let's take a look. And let's take a look at gold. And whoops, I don't want to look at gold that way. Let me look at gold this way. I'm going to use the spot. So, okay, I'm just going to reiterate what Steve and I were talking about a little bit earlier. So it's not surprising to me that gold is rallying. Now, what's been surprising to me is the unadulterated rally that we've seen in the last couple of weeks. So now, if you think about it, this from how like the market just got screwed completely, you've got all of this right here, and you had everybody that was short. Now they're all squeezed out. And what Steve was pointing out is maybe we can get a rally towards this 1320 level, which we're almost at, which is a 127% extension of the last down move. So you got the last down move, 127% extension. We're probably going to end up stalling somewhere around here. You can see the daily RSI is starting to get overbought. So I sure as hell wouldn't be chasing gold up here. But can gold go to 1320 to maybe even 1340? Absolutely, it can. So I sure as hell wouldn't want to short it either. But I think being long it, you're obviously a little late in the game, because if you look at, and we pointed this out, if you had ForexAnalytix, and Michael, you did, and you are a subscriber, when we hit this, because I put on a long pip pattern in play right here on December 14th, right? Okay, so December 14th, right here, where we started to move higher, we had 161% extension, 78% retracement, big confluence of support, and I just, obviously I didn't think the bounce was going to take us to where we're at right now, but this is where you wanted to be long. Now trying to be long up here, this is just all momentum. So now it's squeezing, and I don't know where the squeeze is going to stop. Just again, my assumption would be, you know, right here or right here. And that, but on the flip side is, you know, market gets a little risk off, and, you know, hell, gold could end up, you know, going even higher. Like I said, I wouldn't want to be short. I would just have a hard time being on the long side. He also wanted to take a look at copper. Let's take a look at copper, which I have not looked at. I have not looked at all. So copper, which I should be actually, yeah, we're at the 618. You know, what's interesting actually about copper, you see this big, you know, this is a big, big level of resistance here at the 618 retracement, and we're right up against it. You'll notice that the Aussie and the Kiwi are the same. You know, the Aussie is knocking its head up against, the Aussie's knocking its head up against this 50% retracement. The Kiwi is knocking its head up against the 200-day moving average, also like closing in on this 50% retracement as well. So it makes sense that copper would stall here, the Aussie and the Kiwi would stall here. They all look to be moving kind of in unison at this point. So anyway, big moves. Again, I don't know if I'd necessarily fade them. I just don't know if I would want to be on the long side. Anyway, after this big of a move, Nick, I know, or Nick, excuse me, I just said Nick. Dale, I know you have a interview. I don't want to bleed into that, and I'm sorry I didn't get to every question, but I want to wish everyone a happy new year. Thank you all so much for your support. You guys have been great throughout, you know, 2017, and I know I had a great year in trading. I hope you guys did too, and I hope 2018 is going to be double or triple whatever production you did in 2017, and I hope we can all do it together. So thank you very much. And Dale, I'm going to pass it over to you.
Thank you, Blake.
All right.
Happy New Year. That's a nice wish for everyone. Double or triple of last year. Only if it was in the green. Okay, Steve, I'm going to pass you the baton and make you the presenter, and then you'll have the mic. You'll also have the screen. And Happy New Year to you, Pivot King. Great to have you back.
You hear me?
I can, Steve. Happy New Year, buddy.
Oh, you can. Hey, Happy New Year. You guys can see my screen?
I do. I see. Let's get started. Go to
Okay,
webinar.
I'm Google here. Okay.
Google.
Let me just, where's my charts?
So I'm humbled to begin the new year of interviews with someone who had one of the most highly viewed interviews of the year last year.
Well, thank you.
You have a great following, Steve.
Yeah, well, a bunch of good guys.
Yeah, because it you know, it wasn't all us.
Oh yeah, just, you know, spread the word, and you know, that spreads like a virus, I guess. But
yeah, I have one of those right now. So so are you having trouble getting to the screen? You want to talk about with us? Maybe
let
we
me
can
just
help you out. There'll be a screen share option for you, and then you'll be able to select which screen on your workstation you want to show.
Share my web. Okay, yeah, I see some share screen. Let's see here.
Maybe if you click it again, maybe you have it on. Do you have a couple of monitors working?
Yeah, I got the 6 right here, but I'm trying to find which one.
Yeah, and then you just move it to the one you want to show instruments. So, you know, I've been following you on Twitter, Steve.
Which one do you see now?
Okay, now we have, that's exactly what I was going to ask you.
This is a trade I just did. This is a trade I'm just in right now. Do you see it's going to the T?
Yeah.
Do you see it?
Yeah.
Yeah, this is a trade. It's selling.
You love this natural gas market, because when I see tweets on Twitter, you tweet about natural gas a lot. Why is it one of your favorite markets to trade? Is it because it really responds well to your technical levels and your methods?
Well, yeah, look at the volatility. Like, if you look at my screen now, you see the you see it?
Yeah.
This is an indicator I have. You see this yellow band?
Yeah.
See
what do
how
you
it
call
stays within it? You see when
Yeah.
it breaks from it too? So when it breaks from it, it usually comes down, right? It's like a, whoosh, you know?
Yeah. So
So
is
it's
that an envelope type of thing, similar to like a Bollinger Band, or what would you call
Yeah,
it?
it's better than a Bollinger Band, that's for sure.
Okay.
But this
Well,
is where it's
he's an old guy. You're like the new wave.
like for a correction, like you're looking into here, right? If it gets here,
Okay.
that's pretty low, but
All right. So
it could stay in these bands for a long time.
okay.
As you can
So
see, do you see
natural
that?
gas, one of your favorite markets to trade. Do you use these bands? Are other energy markets on your radar? Here we are in New Year, Steve.
Yeah, I can just, I'll give it to you yesterday. Here, I'll show you some charts. And they all hit, Dave. I just posted them yesterday. And I'll give you oil. I said it was going to, what, 60, 60, 60, 70, and it hit, oil hit 60, 70 right to the tick, as you can see here. Here's your tick hit. Do you see it?
Okay. How
Look
do
at that.
people get your signals? Where do they get them? Off a private Twitter feed?
But Dale, that's pretty sick, isn't it? Like, look at that. This
Yeah.
is on the daily, right? And look where it gets defended. You see that?
Right.
Defended, boom. Now if this breaks, if this breaks, you see this line in the sand here?
Yeah.
You're gonna go to these bands. And this is where you would buy, right? And see, look at this. You see the band? Buy, right? You see how you imagine like when it's in this yellow band, you just buy and look, they're really, it's really, this is an indicator. It's beautiful actually.
Is it something you coded yourself?
I had a programmer code it.
Okay.
Yeah.
All right. What do you call it?
My secret indicator. The best indicator. I was calling it the best indicator. One person's like, don't call it that. I'm like, well, I don't know. It's the best to me. I don't know. It keeps you on the right side of the trade, you know? So
Okay. All right. Then it's not a secret anymore.
Well,
in fact you're making it very public right now. So but I love it. So
they don't know what it is, though. But
yeah,
I don't want that to
no
go
idea.
public. To be honest with you,
What's that?
I don't want that to go public. Like Twitter, there's some people on Twitter that I don't know. It's weird. I don't know. I caught an analyst. Yes, someone sent me a message saying, like, look at this person. All your numbers are being advertised, and I looked for the past month, and every single number I was given. This has a subscription service, this person. Like, giving my numbers. I'm not kidding. Like, unbelievable.
Yeah, that happens to us. Yeah, it happens it's happened to Grega. People copy and paste. It's like
well, that's not
the only way to put a good spin on it is what they say that copying or impersonating somebody else is a high compliment. But basically they're thieves.
They are. Yeah, there's a lot of them. You want to go through some charts? Let's go through. This is ES. I told yesterday. This is a chart I just did yesterday, right? And I said, look for 2710 to hit. And if you look at ES now, I'll show you the chart now.
Do it.
You see it's coming up to it, right? You got that bounce?
Yeah.
So, it's all about timing and just waiting. Dale, all I do is I wait. I wait a lot, eh? This is the reason why I want one of my sites. I just wait and wait and wait for the setup. And I think everybody out there, if they can just wait for the perfect setup.
Well, you need to do, Steve. I used to play Tom Petty's song, "The Waiting's the Hardest Part." So that could be your theme song.
Yeah, for sure. Well, you know what? I used to like rush into trade, I don't know, years ago, but I learned the hard way, Dale. Like, I find like even natural gas, look at the correction to 291. Overnight, I knew it was going to correct because it just overextended. I like natural gas because it has those big swings, right? And it works with my pivots like really, really good, even though sometimes it overthrows by a point or so, or 2 points. It's once you get that reversal, it's violent, right? And it's quick, Dale. It's in and out. I like day trading. I don't like swing trading as much anymore, because swing, you really got to wait for the move. You know how a price could be stuck for like months.
Right.
It could be in a range, right?
Okay, so you answered my next question. I was going to say, you know, a lot of traders going into a new year, they start thinking about, you know, what are going to be the trends, or what are the sleepers in 2018, you know, what are going to be the themes. And you don't, it's, to you, that's a waste of energy. You just go with what's happening now. Unless you have some macro longer term views. What's this?
Oh, do you see it? This is the oil chart. I wanted to bring this up later, but yeah, Dale, I found for myself, I found day trading to be much more controllable.
Personality.
Yeah, my personality, and controllable though, because with my sort of system that I created for myself, I find that the price moves within the pivots so accurately that, you know, you trade, let's say natural gas, and even a 0.5 of a point, or oil, 10 cents. You know, you do 10 trades at 10 cents. That's $1. That's huge. And you could leverage up hard, right? So you look at the setup, you leverage up hard, you have your stop, and once it moves, and you're out. You know, you do 5, 6 of those nice a day. You do, like on open, I could have made, like right now, I could have done at least 3 or 4 trades. But I'm on interview. But I like the open, and I like around 230. I like, and I like the close. I think I'm going to be trading just 3 times a day now. The rest is just boring.
So you're refining it. Unless the character of the markets change again. You know, we're kind of in a pretty quiet, dull period. I mean, let's face it, volatility levels have been quite low in many different instruments. So maybe if things pick up, you'll trade less. But you know, if it's not broke, don't fix it. So what are we looking at here? It's an oil fund.
I just want to let people know, like, a lot of people trade based on oversold and overbought. I agree. Like a lot of people just trade off that tail, and like I just want to let people know. You take oversold and overbought as a piece of information. You don't just trade if something's oversold. Here's an example of oil, of B&O.
Okay, yeah.
Now, people over here, right, they would be saying, look, this is oversold, right? So they buy, then they buy more, then they buy more. And these are the types of examples where you blow your account.
Yeah. So they try and buy oversold, and then their account is over.
And that's how these guys make money. You know that, Dale.
Yeah.
Everybody, you know, it's oversold, it's oversold. So, you know, there's people shorting gold right now. And I think gold is going to correct. But I had gold. Yeah, I put it yesterday. Guys, look for 13.19. You know, people at gold were seeing at 12.80. It's a short of a lifetime, you know. Look at this fractal. Look what it did, you know, 6 months ago. Or look what it did all these other times. You know, I think Wall Street uses that information to trap you sometimes. That's,
that's an important statement. If anyone prefaces a trading opportunity as it being, quote unquote, the trade of a lifetime, first of all, they don't know that. Second of all, they're making one trade too important to them. Third of all, they're inspiring over leveraging. And fourth of all, you should run away.
Well, personally, me, you know, there is a setup there for gold to correct, but for me, I think it's too risky. This is just for me. And I can just move on to something else. When something's not, when I feel uneasy, you know, Dale, you get that gut feeling that something ain't right. When I get that feeling, I just move aside and go on to something else, right?
Yeah.
People feel like they got to always, you know, they lost money in this particular instrument, and they want to go back to that instrument and make that money back. And that's the wrong wrong attitude. I used to have that attitude years ago as well. I took it like, you know, I want revenge, you know.
Yeah.
And thinking that sort of way is going to get you into trouble. It got me into trouble many years ago. And, you know, being a trader, it actually makes your, you know, you get more mature being a trader. Like you become smarter, you know, in
Well,
business dealings.
But it happens with time, Steve. Let me ask you.
It does.
You've been around for a while. How many years would you say it took you to get to the level of competency that you're at now?
Blowing my account 2 times. I've lost the first time about $850,000. I have a business that took a big hit, and I went nuts. I started started practicing and saying, "Oh my God, I know this works," and I came up with, "I know this works, I know this works," and I kept on practicing, and then I started seeing my account, but with my practice account, you know, I was hitting like 1,000, 2,000 a day just on the practice account for like continuous for like 2 months, and I put money back in, I saved up, and ever since then I started growing it hard.
So
every day.
Did it take you a few years?
Yeah.
Most people say 4.
Yeah, I'd say around 2.
Okay.
I went nuts though, Dale. My wife even knew, like I was on my computer 14, I was just like looking at charts and finding the movements and looking where they, because you know, when you look at a chart so much, Dale, for some reason, I don't know, it's weird. I'll look at a chart right now that I trade, like usually like gold, silver, and I'll know where the price goes. I'm not kidding. It's weird. You look at it and you're like, this is where it's going, and it goes. So I guess when you look at something and feel the market, you get attached to it, and you kind of know where they're going with it. It's weird, but it's true. I'm sure some other traders that are listening now understand what I mean. Like, Dale, you ever seen a chart and you're like, this is where it's going? You can just
you like see things that are going to be magnets. But
that's right.
I've also felt that way and had it not manifest that way. So to me, I guess the question would be, you know, when you have a lot of confidence in your targets, what's your risk management style? Like perhaps give us an example of a trade that you did, and if it hadn't worked out, what your risk would have been on that trade. What do you use if it takes out a band and it doesn't react from a band and keeps going? Are there examples of that?
Yes. Here, let's see what I can bring up here.
And then I want to give you some time to show your website and how people could get a hold of you.
Yeah. So, you know how I have my pivots, right?
Right.
When the pivots, usually when here's an example. Let's do copper. So you have the pivots here. Let's say for copper, for example, I have a target here. This was yesterday. I really look for the L. The L is my line in the sand. So if I take a quick trade and the trade is reversing and not going my way, especially if it stays, if it goes below this green, my little green indicator here, if it closes below, I'll get out of the trade because it usually reverses. And then what I'll do is I'll go short. So the money, I'd reverse the trade. So I get really, I get out of the trade right away if it doesn't work.
Okay.
Yeah, right away. I don't waste time. I don't say, oh my God, it's going to go back up. No, I have rules. When those rules hit, I stick to my rules and I get out.
Okay.
Yeah.
You want to?
I find that if you don't follow your rules, they'll like you can be in deep trouble. And you know, yeah, it's just a system, Dale. Like everybody has their own way of trading. I'm sure you do too. You know, and everybody has their own way of actually initiating a trade, right? So if you don't have a plan to get out, you're going to be in trouble. you can't just do a trade without knowing where you're going to get out, where your target is, you know.
Yeah, I think you should have all those answers before you initiate all of them.
You should have all those answers before you pull the trigger. And if you don't, then I don't know why you're taking the trade. Like,
What's your average leverage on your trades? What kind of leverage do you use?
I don't really use a lot of leverage, but I would say, let's say if you have 100 grand, I'd probably do like 4 contracts, 3.
Okay.
It depends though. If it's really into my bands below, some very rarely I load up. But usually when I load up, there's a reason for it. Tight stop though. It needs to bounce right away. If it doesn't bounce right away, I'm out.
So
right away.
I also want to ask you, last time you were on, you said you have kind of a secondary mission to unmask the charlatans in the business. How's that been going? Are you still doing that? Huh?
No, I kind of laugh though. I don't know. I don't have time to I just want people to be aware. Like, look, you know, this person doesn't know what they're talking about. You know, and then
we'd have a few unmaskings. You know, kind of like what the CIA and FBI does. We might unmask a few, but you know, why don't you show us your business model then, Steve? And if people want to work with you, the best way for them to be in touch and find out what you offer. You want to show your website or?
This website should have been done a long time ago, Dale. But here, I'll show it.
Still not up?
Tell you what's going on with it. This is thebesttraders.com. It's going to be a website where other analysts could also come to the site and and post their trades. And so I made kind of like it's going to be like Twitter, but more organized. So that's why this site's been taking a long time. There's a lot of money going into it, and it's going to be very it's going to be really good. So you're going to have live conferencing on it. There's going to be instant messaging, forum, live webcam with other members you can see. So all these capabilities are going to be on this site. I'm going to be the head analyst, of course, but there'd be other analysts that are already interested in coming on, and I'm going to put them on there too. So yeah, it's going to be live alerts, and I'm thinking about doing the course, but Twitter's kind of turning me off with doing the course, because I'm kind of scared that people are going to take what I'm doing and just go public with it and pretend it's theirs. And I'm concerned about that, because Twitter sometimes is a little bit weird. There's a lot of evil people on there. I don't know. It's just, that's what I found for myself. That.
Do you spend time on other social media you feel more comfortable with, like Facebook or Instagram?
No, I think I'm going to do a lot of podcasts moving forward.
Okay.
I think those are more. I think those are more reliable. You get more traders that actually trade, and you know, they don't trade with like $500 in their account. I'm not looking for those types of traders.
Do you have a launch date in mind for this? It's
February, Dale. Probably the middle of February. I'm going to really shoot for it. I'm pretty sure the programmers are going to get it done by then.
Okay, well, do this, Steve. When you're about to launch, let me know so I could help you out in a way on the evil Twitter. I don't have an evil feed. I have a lot of open-minded people on my feed, and I'll let them know. And I hope that 2018 is a great year for you, not just in trading, but in all ways. And I appreciate you being here today, and I enjoy following your tweets, and wish you the best in this upcoming.
Thank you so much, Dale, as well with you guys too. I hope you know, you have a prosperous new year, and your podcast keeps on growing and growing and growing and growing. Because I can see that you're working very hard on it, and you know, it takes time for what you guys are doing. Every day you know, you guys are interviewing and interviewing. So eventually you guys are, I'm sure you guys are getting bigger and bigger.
Yeah,
It's
I think
fun
we,
to do,
I
right?
think we did about, I think between FX Street and Face, I'm closing in on 1,000.
Wow.
Yeah,
Wow.
so you're in there, and I'm sure there's gonna be plenty of views of this, and appreciate it, Steve. Good trading
Yeah.
to you and everyone whose work you touch. I hope it's a great year for them as well.
Thank you so much, Dale. And
All right.
I guess talk to you guys later. Take care.
Thank you, Steve. Everyone, that's Steve Anton. He's got a few Twitter handles. I see this one at Steve Anton Trade, and you could also follow him at the Pivot King. Okay, so everyone have a great day, and we'll be back tomorrow. Looking forward. Remember now, everyone in here is an eagle. All right, we're the Face Eagles, and we're going to soar above the crowds this year, all of us together, like the Air Force. So above all, don't just count your pips, count your blessing. Yen crosses look weak, so let's see how it pans out here. You're very welcome, Kareem. Great to have the team back. Blake, Steve, Stelios. Sure we'll hear from Nick and Grega sometime this week. So everyone, this is the first day of our journey into 2018, and let's make it our best year ever. See everyone tomorrow. Thank you, Steve.